How's it going, everybody? In this episode, we're gonna be looking at the stock charts. I definitely don't really do any technical analysis anymore. I mean, you can see lines on the chart, but anybody could draw a line. I definitely prefer like fundamentals and stuff, and obviously, again, I haven't been trading or anything like that. I've just been chilling. But I think it's nice to get a visual on where the stock prices have gone with some of these companies that I've been eyeing up, and I guess companies that I have bought. So in this video, I'll just chat about that a little bit. Today is September 1st. The market's still open. It's open for like another hour or so. My cat is just like about to walk on the table. So cute. Yeah, so I think this video will go out like Sunday, but as of right now, Intel is up almost 4.5%. I'm still down on this. Where is it? I am down 13% as of right now, which is okay because at one point it was like 40%, and it's my biggest position. Right now it's about 18% of the portfolio for stocks and corporate bonds and ETFs, so kind of big. I think once I break even on this, I might want to deleverage a little bit. I don't know yet. I'll see. The thesis that I think that I have, I mean, it's been like a year and a half, so I still need some more time for this trade to develop. I just sat through a lot of bad times, I guess, but yeah, the stock price is going up, and I guess, I mean, we could technically look at the weekly candles, or weekly candles on a 5-year time frame. This was a daily candles, daily candles, yearly time period. I don't know why I'm mixing up my words. But anyway, yeah, my average price is 41.90, 91, so like right around, I have to say 42, right around here, so it's got to push above this like 37.50 price. Having trouble breaking above 37 though currently, so we'll see what happens. But yeah, I sat through some stuff. They cut the dividend. It's looking rough out there. But anyway, I want to talk about Foot Locker. This is very sad. So my average price is $34 roughly. So like right here, right around this area. And man, I was up. I mean, I bought here and it fell, and I bought more, then it went up. But like $34, so I was up at one point like 30-something%. I didn't take the profit, whatever. It had bad earnings, another bad earnings, and then another bad earnings. So it's off like 62% from like where I could have sold it. Like $45 is fine, 30% gains fine. Like I don't know why I was being greedy. I thought I was waiting for it to go to this line up here, but just I don't know. Never be afraid to take profits, but I do wish I took some off the table though. But anyway, I'm down. Instead of being up 30%, I'm down 42% with the dividend cut too. So yeah, I know it says there's 40-cent dividend here, but it is not. They did cut the dividend. I just haven't been looking too much into this company, really any companies, so definitely my fault for not, again, if you're being a bit speculative with certain things, and you gotta either do your due diligence, keep up to date with the stock or company, but I don't know, the big sad. I should have just took some profits while I had the chance. Now I think at one point this was like 8% of the portfolio, now it's like 3. So should have took profits here. I mean, that's hindsight, but at the same time, it wasn't really hindsight. Like, this thing's kind of risky. Yeah, I was being greedy, but I thought I had more to push, like to go higher, but I should have at least took some off the table. But yeah, we're back to like COVID levels, so not looking too spicy. 3M. Yeah, we're just doing whatever. It's SCHD. I've been chopping away at this every week or so, adding some more to the portfolio. I think last week or last month it was probably like not even 1% of the portfolio. Now it's about 3. So just been added here where I can. I do hope just drop to like the $70 level again. That's where I'll pick up like, or I'll dump like more money in. But if we do ever get to this grind line here, maybe like $65, like within this year, if it does get there, that'd be nice to put a lot of money into it. But yeah, it's just little grindy line. This is back from 2012, so I mean, yeah, more like a technical, I guess, price level. I'm trying to figure out the words, but yeah, gonna be chipping away at that. Snap-on needs to fall in price for me to pick up some more. It's just so expensive. Assignment property, I'm hoping it gets down to like $100. I don't like the position that REITs are in. I think Assignment Property is, again, a good company and they're well positioned, but at the same time, if interest rates remain this high or they continue to go higher, companies like Assignment Property, I don't know. I feel like the market's gonna value them at less, so I think even though it might be a value now, I still think it'll be even more value in the near future. But yeah, I'm gonna continue chipping away at it, every month or so, building a little bit of a position. But I get really interested below 105, 110 to 105. I think that's realistic to do. Verizon's getting kind of still. Oh yeah, Walgreens. This is such a sad stock. Today where is it? A lot of news today, but oh my gosh, pharmacy chain operations, Walgreens, yes, Walgreens CEO steps down. So, I mean, they're just not doing too hot. They're on a 14-year low. I think they're gonna suspend or cut the dividend at least a little bit, but this continues to get clobbered more and more each month, and it's just like, bro, I mean, I thought it was a good value in this like territory, then it like fell, and then I was like, sure, I'll buy a little more. Then we rebound nice, then it just gets destroyed from that point on. And there's just very little technical support too. Actually, I guess now is the technical support, but it's already fallen so much, so yeah, not looking too hot. I just hope it holds a little bit. I am down. Where is it? 43% on a pretty big position relative to my portfolio. And I did sell some, I think, last week, so actually, what was last week? This day, last Friday, yeah, I sold a little bit. I was just like, again, it's not necessarily good to sell into this weakness, but it's just like, I would want to raise some money. The position's already kind of big still, and it's just like, I want to have access to more capital, so, I mean, I trimmed off less than 10%, maybe it's like 10%. Exxon's still chopping around, nothing too much here. I want to talk about CCJ. This thing's kind of sad. So I own this at $17 average price, and I sold right here, I think it was. So I made like a 50% gain, or was it here? I think it was 40 or 40%, somewhere here. And then now here we go. It just keeps going higher. I could have been 100% trade, but again, I can't be mad at taking the profit because I thought this was gonna kind of chop down. It was showing some weakness, but continued to trick higher. But I'm sorry, I keep yawning. Hopefully my yawn is getting contagious and you're also yawning. I like the uranium idea. It's just I don't know how to price it, and I already had a pretty big gain, and I wanted to liquidate that, but now it continues to go higher. Where, geez, we haven't been this high since 2011. That's massive. No massive correction, I guess to say. It just continues to go up, but it's already kind of pushing it. Maybe it goes to like 42, so maybe got like a 10-15% more gain, but hopefully we see some big correction or pullback. But I think if the market starts dropping again, I think this is one company or one sector that I want to add to, and I think CCJ is the vehicle that I want to do that with. But again, that's from my like trading money, so it's a relatively small percentage of my portfolio, and again, understanding the risks. But if you've already watched the other videos that I had the last few weeks discussing my honed in like portfolio mindset and execution, again, it's putting one stock slash idea into perspective of an entire investing portfolio. So just keeping that in mind. What's interesting too is Disney. There's so many things we could talk about because I don't think we've done one of these like chat sit down videos in a while. But Disney's getting smoked. I am almost getting interested again because the valuation is it's getting there. Like, we're below 2015 levels. It might hold here. It actually might. This is at the bottom of the channel of, what do you call it? Bottom of the channel. Like if it drops here, we're probably going to like $30, which it probably isn't. That'd be actually really interesting if it did. I wonder if I just pick up a couple shares and just throw it in the portfolio and see what happens. It should hold here. But it's like, do I want to put the money towards that? If Disney ever did fall like the $40 or something, that'd be crazy. But I still remember I was one of the people to buy $200 because I got like I FOMO'd myself into it. It was weird. Like I knew I shouldn't have, but I just did it anyway. Yeah, Disney's really low, jeez. And I get there's a lot of stuff going on with this company. I still made a profit off of my shares, but man, does it hold from a 7-year, 8-year low, or does it continue down? I mean, what if it drops? I could drop another 10%, maybe, and it holds it, but this is such a bigger support area. I don't think it goes back. I mean, it doesn't have to fall to a support level, but like, I don't know. Technicals, they do work most of the time, and it's what the bots use to pretty much trade. Interesting. Anyway, enough chat about Disney. They're getting smoked. They're getting smoked to bird. Nvidia is. I can't believe this. This thing was $50. Wait, where are we? No, $100. Beginning, actually a year ago. In 1 year, it's moved 250%. Insane. Massive moves. Massive. Like that is incredible. This will probably pull back and then just shoot again higher because of hype, but I don't think the valuation is still there for me, and I get theirs. I get it, but it's not for me. It's just not for me. O Realty is also falling. Go back to the 5-year. O Realty again, kind of smoked again. I think, and not smoked, but it's been chopping around. But I mean, I think it's showing technical weakness. I guess I haven't again been doing technical analysis, but like I've been watching this consistently because I'm debating owning it or not, but it's been sloshing around for like a couple of years. It's really not made any gains either. Right now, what is it? It's like a 5% dividend, I think 5.5. So not terrible, but you get 5% with 0 risk, so that's some things just gotta keep in mind. Also, Target is getting destroyed too. Continually falls. It's getting. I don't know. Why are all my chart lines messed up? It's kind of annoying. Why, that's weird. But it's getting interesting. Target too. I get there's problems and issues with it as well, but it's like, at what point does it become a value? Checking out the SPY, we pulled back. This kind of almost looks like a cup and handle. I think we'll probably interesting is that the handle, it looks too small to be the handle. I think we'll shoot up to like the 475. Then we'll form the handle, pull back to here, then maybe go up. I still wish the market would fall. I wish it would be at like 300 right now. But with rates being this high, like the market should be here. I don't understand why there hasn't been like the amount of money that is still moving into the market as opposed to like bonds and stuff. It just doesn't really make sense to me. I guess people don't trust bonds. They would rather own the asset. I don't know. I don't know. What else? What could we look at? What's moving today? I guess we could talk about Dell. Dell is shooting up today. I guess on good earnings, it's up 21.5%. Some big boy percents. Oh, there's some other stuff I wanted to chat about. Google. I had Google like $100. It dropped. I didn't actually pick any up, but then it shot up. I think I sold it at 120, so like a 20% gain. I'm definitely happy with that, but now it's ripping higher and higher. I'm not like mad though. Again, it doesn't fit my investing needs. I think it'd make a good trade, and I made money on the trade, so I'm not sad, but it always does hurt just watching it rip up a little bit more, you know? It's like, let's get rid of that. BJ's, I've been eyeing up BJ's. I like the company, but I haven't done enough. I haven't done actually any fundamental analysis on I like the company itself. Like I like going into BJ's, but I don't necessarily understand I didn't do enough research on the company itself. So they also don't pay a dividend, but they might. So, and I mean might as in I feel like they should. Not that like they said anything. Disney is fascinating to me right now. Maybe I'll buy like a couple shares or something like that, just put it in the portfolio again, and that'll be a longer term. Like I just want to own Disney. What is Activision doing? Is it still on my radar? Activision is. I had a big rip up. $1 dividend announcement. This was still one of my saddest. Wow, it's almost been it's been over 5 years since I started in the market. Was it here? Yeah, this is where I had a lot, not a lot. At the time I had like, yeah, I guess it was 20% of the portfolio in Activision, and it just ripped down. I was like, what? And then I sold like right down there because I'm an idiot. I know I already talked about that a couple times on the channel, but yeah, that was just dumb of me. Wait, did it actually rip up that much? In 2 months it ripped back up. I think that was why it was even sadder. I don't know. Anyway, I digress, or I don't want to continue to go back on. Alibaba's still pretty cheap. Interesting. I thought by now this would have at least went back up somewhere, not still in that lower channel. I'm just scanning through some other stocks, seeing what's around. Is it Dollar Tree? The Dollar General. Dollar General is not having a good couple quarters. They kind of got cut in half since last November, not even a year. I think is everybody just saying shoplifting? Like I know it's a problem, but. And I get it hurts margins and stuff, but like, geez, it's pretty insane. Oh, eBay's paying $1 dividend on like $50. That's like 2%. So actually getting back to Foot Locker. Man, I definitely don't want it in the portfolio. It just doesn't, it no longer fits what I wanted, and it, even, like when I discussed the other videos, it was back here. I was just hoping it would just kind of go up a little bit, you know, chill, maybe ride a little wave up, and I just wasn't expecting it to drop 30% I mean, now it's rebounding a little bit, but like, this is like the weird situation where it's like I don't want it. I'd rather have something else, but I own it already and I'm down. And it's like, do I just let it do its thing? If I lose more money, it's okay, it's whatever. Or do I just cut the loss, take the, just cut it? No, it's kind of a big loss, I would say, in my opinion. Not massive, obviously. Like I can recover from it, but like I don't want to lock in that loss. And it's not like I would sell, or if I did sell, I wouldn't immediately like throw it into some other asset because I don't have anything that I immediately want right now. I mean, maybe an ETF, but I'm not dying to, put the money into them. I think I'm just gonna let it do its thing. Hopefully, it kind of rebounds a little bit, but if not, it's whatever. So I'm definitely not in like a great spot, but like, again, I'm accepting of it because it's my mistake that I did not at least cut the position when I had a pretty big gain, and I did it relative to the portfolio again. Like it was a big gain, and then the stock itself was a large percent of the portfolio, with the risk that I knew I was taking, owning it. So yeah, don't think there's any reason for this to be like 7, 8, maybe 9% of the portfolio. Like there's just like, wow, it's Foot Locker. Like it's different if it was like a different company, but yeah, I guess getting back to Intel too. I know I said I wouldn't like cut the position and I would wait, my time horizon and to 2025, or I think 2025 is when I said I'd reevaluate. But like, how do I explain this? I just hate seeing it right now. It's 18% of the portfolio, like I mentioned. If it does get back to here, it would be like 20%. It's like, do I really want to own my stock portfolio? Do I want it to be 20% of the portfolio? I don't think so. I think I don't know, but it's like I'm already positioned in it. Do I just let that decision like sit? And moving forward, I say, okay, I'm not gonna add more, but it's gonna slowly, the percentage should go down and fluctuate because I'm adding more to the portfolio and other stocks and other assets. So it's tough, and I would hate to have a decision that I made in like early 2022. Yeah, back here. How long's that been actually? 500 days, 550. Again, I lost a good amount. I didn't lose any money technically, but the asset depreciated a lot. So I wish I bought down here, but I didn't know, so I continued to buy all the way down, and now we're kind of going back up. I would hate though if in like 3-4 years this thing is like $80 or like $60 even, because let's see, I'm at like, let's say 40, I'm at $41. What if it goes up to 65? That's a 60% gain on 20% of my stock portfolio. Like, I guess you can't really think like that, but it's like I weighed the risks and stuff at this period in time, and I said, okay, and I gave myself a time horizon and reasons that I thought it was gonna be that valuation. I don't think I said 60. I think I actually said like 75, 80, which I mean is a lot. Like that thing's gotta climb almost 100% from where it is now. But from my position, that would be like 70% gain. I don't know. I don't know. It's just like, do you trust yourself and your analysis that what you did at a certain time was okay? And I get things change and fluctuate, and if you do some analysis like one quarter, then you do it another, it might be different and yada yada, and things change. of a locker, but also I don't want things to happen like CCJ where it slips away and I could have like over 100% gain, and potentially at that point you would cut the position in half and you just keep it, because I think CCJ moving into 2024 when their MacArthur mill or whatever mining thing comes online, then they actually start generating some good cash. So again, I don't know the valuation of it, or I don't know how much that thing's gonna be producing and how much they can make like margins off of that, but it's just things to think about. And I don't want to cut Intel like what happened with Exxon. Like Exxon is carrying the portfolio. Like without Exxon, I think I'd be down, but because Exxon is so massive, it's what is it? It's 20% of the portfolio. No, it's 18% of the portfolio. 17 exactly right now. And it's ripping up. Again, it could go down, but I don't care if this goes down, because again, my investing goals and everything has to do about the cash flow and the safety of it. I'm not trying to contradict myself. Intel did cut the dividend. That does kind of put it against my goal of like cash flow and the safety of it. It is concerning a little bit, but at the same time, what if in like a couple of years, and I guess what if is the bad thing, but yeah, you kind of have to play that game sometimes. What if in like 2 or 3 years they start ramping the dividend back up? Then you know, it just, there's a lot of things to consider. I think regardless if Intel did completely cut the dividend, I'm just thinking hypothetically, like they're like, we're no more dividend, we're just gonna focus all on, capital appreciation, I'd probably remove the stock from the portfolio again, because it doesn't align with what I want out of an investment. And again, it could rip higher and higher and higher, but it's like, that's just a risk that then I would have to take. And Walgreens just dropping more and more every second. Come on, Walgreens, the big dumb. JP Morgan. I'm just looking at some other random stuff. Yeah, so if I'm putting money in the market right now, the only thing I'm really gonna be buying is SCHD. If Snap-on somehow drops like 20%, yeah, I'd buy some. If Summit Property drops 10, yeah, I'd buy some. Other than that, though, I'm chilling. I am chillin'. Anyway, though, I'm gonna wrap up this video. Stay tuned for next Sunday when we do some more stock videos. I'm not almost done reading Atomic Habits, but I'm almost done reading Atomic Habits. Maybe like within another week or two. I do kind of want to write up some notes and stuff about it. So I might do that first, then make a video, but we'll see what happens. But anyway, I will be making a video about that because that was a great book, and I want to share some insights on what I thought about it. Thanks for watching. Stay tuned for some more videos. Let me know some other book recommendations down below, and maybe some stocks and